Key factors to monitor in Bitcoin and cryptocurrency markets for the latter half of 2024. Crypto enthusiasts predict more gains for Bitcoin amidst ETF demand and the halving impact. Bitcoin and other cryptocurrencies are poised for an intriguing second half of 2024. Crypto enthusiasts are optimistic that Bitcoin could see further gains, driven by the burgeoning demand for spot Bitcoin ETFs and the lingering effects of the recent halving event. While there's anticipated demand for spot Ether ETFs, industry experts suggest they may not replicate the success of Bitcoin ETFs. Despite this, the approval and launch of Ether ETFs could still positively influence the broader cryptocurrency market. Regulatory clarity continues to be a pivotal issue, with investors keenly observing statements from presidential candidates and recent developments for any indications. The stance of regulatory bodies will significantly impact market sentiment and investment strategies. Bitcoin has experienced a significant rise this year, climbing over 30%, primarily fueled by the demand for Bitcoin ETFs. However, recent months have seen a pullback from the highs achieved earlier this year, with Bitcoin slipping below $57,000 after peaking above $73,000 in March. The outlook for the remainder of 2024 remains uncertain, with various factors at play. The introduction of spot Bitcoin ETFs in January has been a major driver for Bitcoin's performance this year. These ETFs have seen net inflows exceeding $14.4 billion, primarily from self-directed investors. Market watchers believe there's potential for further demand, especially as financial advisors grow more comfortable recommending crypto products to their clients. Investors are also looking forward to the expected approval of Ether ETFs by the Securities and Exchange Commission, SEC, by the end of the summer. Bitwise CIO Matt Hogan projects that Ether ETFs could attract $15 billion in inflows within the first 18 months. While these ETFs may not reach the same heights as Bitcoin ETFs, they are still expected to generate significant interest and demand. The upcoming presidential election could be a critical factor for the crypto market. Former President Donald Trump has shown more support for cryptocurrencies compared to his previous tenure. On the other hand, President Joe Biden's administration has leaned towards stricter regulations, though some recent decisions have hinted at a potentially evolving stance. The recent Bitcoin halving, which reduces the creation of new Bitcoin by half, has historically led to price increases over time. The last halving occurred about 6 months ago, and while there was significant pre-halving price activity, the full impact may still unfold. Analysts note that bull markets often commence several months post-halving, suggesting that the recent downtrend could be a temporary phase. The failed Bitcoin exchange Mt. Gox has started distributing billions of dollars worth of Bitcoin to its former customers. The market impact of this increased supply remains uncertain, with opinions divided on whether it will be bearish or if the concern is overstated. As 2024 progresses, investors need to stay vigilant and consider multiple factors influencing the cryptocurrency markets. From ETF-driven demand and regulatory changes to the after-effects of Bitcoin's halving and the Mt. Gox distributions, the crypto landscape promises to be dynamic and full of opportunities and challenges. If you enjoyed this video and found it informative, make sure to give it a thumbs up. Don't forget to leave a comment below with your thoughts on the current crypto market trends. And if you haven't already, hit that subscribe button and click the bell icon to stay updated with all our latest content. Join our community and stay ahead in the world of cryptocurrency.